Good morning, everyone. Welcome to our latest Traded Black podcast. I'm your host, Shad Dales. Thanks for checking in here today. Yeah, not some easy times since after market on Wednesday as President Trump announced those tariffs. And since then, it's been a tough stretch for the market, to say the least. But we'll get into broader things a little bit later on and what these implications could have for what we like to cover, the cannabis industry. But we're going to get into some industry news stuff right now as far as Air Wellness. They made some restructuring news this morning. Who's their new CEO, what this means for the company moving forward. And is this a larger trend that we could see overall in the industry as well? A really good story that's building in the cannabis space. Rubicon Organics, incredible record-breaking quarterly numbers and year-end numbers they reported earlier this week. Margaret, Brodie, their CEO, is going to be joining us in just a moment. So that'll be an exciting interview to give you some insight on what this company has as far as in-store expansion is concerned in 2025. But a real good story going on in an industry right now, let's face it, is facing some challenging times. So let's welcome into AV here to Friday morning. Good to see you. And it has not been easy since the last time we did a live stream. It's challenging out there.
Yeah, it's been challenging. I think we saw some outflows on MSOS yesterday. Whole sector's getting sold off today.
Yeah.
I don't really know what to say. I mean, it's not fundamentally driven. I mean, yes, there are some cogs with certain companies that can go up. Most companies, if you see a vape product on the shelf, those components do come from China and or overseas. All those countries just got tariffs slapped on them.
Yeah.
There are certain companies that are using US-based packaging companies. Don't know where their input products come from. But we could see costs go up. I don't know if they're going to, let's say, go up significantly for a lot of cannabis companies, but there will be some price increases as it relates to COGS for cannabis businesses, even though all the flower and production is made in the USA. I don't think the stocks are not indicative of that. The stocks are doing something else. I mean, there's outflows, I think, going on with the ETFs. We're privy to that. There's nothing you can do to get out of the way of that. Yeah. It is what it is, and it's going to happen.
Well, I know we cover cannabis, but I think right now, the thing it's killing a lot of people is just like the great unknown. What is going to happen next? And we understand some of the stuff.
There's no unknown. Trump said that this shit's sticking. It is what it is, and this is what's going to happen.
Well, we know what's going on in the U.S. The unknowns is how are some of these other countries. Yes, they've actually signed some interesting agreements because I know they're starting to attract more and more money as far as the U.S. It's just the unknown as to how this is going to play out. But I did read our good friend Matt Wiz Buckley was mentioning about he thinks this is going to be big buying opportunities for the overall industries, and people that are upset right now are the 10% people on Wall Street and the rich elitists. I saw a LinkedIn post that he posted actually yesterday, but I guess it's how the way you look at it right now. Other people I was speaking to right now just say like this is all necessary because they felt like the American dollar is on the verge of collapse, knowing the amount of debt that they're in. And is this some of the changes that need to be made? But short-term pain for long-term gain. You hope that, but again, we'll see how this plays out. My GTI hurts, writes Jake Westington. Yes, I understand that. Justin, appreciate the positive optimism. Outright collapse at MJ stocks. Zuckerud writes, buying opportunities, be safe out there, determining the discount. And John Ham, good to see you. Good morning, sir. All right. So we got a lot on the agenda here today. Margaret Brodie's going to be coming up in just a moment from Rubicon Organics to highlight some of the notable numbers that they reported earlier this week. But before we get that, as we usually do every other Friday here at the live stream, we welcome in CFA from Viridian Capital Advisors, Frank Colombo, to the podcast. Let's welcome him in. Good to see you, sir. Happy Friday morning. And what do you think of all this stuff right now? You surviving?
My PA isn't, but we're doing well. Thanks for having me again. So, I think it's very interesting that the kind of wave of defaults that we saw this last week. With the Gold Fora going into receivership, them defaulting on their loan with IIPR along with Tilt and Forefront. And, the obvious question is this a trend or not? And, I put out a piece on Monday, a chart of the week that shows what I think is a really good early warning indicator that investors can use to chart this, who's in danger. And in short, it's a simple ratio. You take total liabilities and divide it by the market cap of the company, and you track that over time. It's important to track it over time because, as we know, there's a lot of noise in stock prices. So it can dive on a day like today when the stocks are going down. It can go up when they're up. So you need to look for consistent moves. Like, is a company increasing in that ratio over time consistently? That's a warning indicator. And there's a couple warning levels that are important to know, which is right around 5 times total liabilities to market cap. If you work that backwards through option pricing, and I don't want to nerd out on you how you do it, but you can turn that into a market estimate of the asset value of the company coverage over its liabilities. And it just turns out that right around 5 times is when you cross that barrier where the market is telling you the assets are worth less than the liabilities.
Okay, so based on
is a warning indicator.
Frank, quick question though: if you're using market cap as, let's say, the denominator in that equation, and a lot of the conversation around the cannabis industry is we have a dislocation in the capital markets, like these aren't efficient capital markets. How accurate is that calculation when using a market cap, where we could argue that a lot of these stocks are manipulated to a certain degree in terms of valuation and share price, and they've never really had the opportunity to go through true price discovery in the last couple of years?
Well, yeah, I mean, all of that is true. I mean, you have a tremendously illiquid market where you trade, a couple thousand shares, and you can push these prices all over the place. And a lot of them have very little float, as another component of what you're talking about. So the actual amount of traded stock is poor. And I don't recommend using this as your only indicator. I mean, that's why I have a full-blown credit scoring model at Viridian that takes into account 11 different ratios, including this one. But if you lock me in a room and say you can only calculate one number on this company to tell you how good a shape is it, this is still the number I would calculate. It's still the single best. It has problems. Now, as an example of those problems, Ascend is now at 12 times on this ratio. Now, does that mean they're about to default? I don't think so. It means their stock is tremendously undervalued, in my view.
It is.
So
I've been
another
buying
one,
it as of recently.
Another one that is coming up on this ratio right now. Verano is at 4.8 times. They're close to my first warning indicator. Now, does that mean that Verano is about to default? No, it doesn't. So you can't look at this as your only indicator, but it is a good one. It's a you're not going to default without hitting these levels.
Right.
But just because you hit these levels doesn't mean you are going to default. So it's a necessary but not sufficient condition, if you will.
Well, I mean, I definitely tend to agree with you that it's a good indicator, because for months, quarters, and years now, I mean, Gold Flora, Tilt, and Forefront are names that we've said as an industry have problems. Like the writing's been on the wall with those names for some time now, especially when you look at their financings, the way that the companies have been run, and just the overall stock action or price action as it relates to their stocks.
Yeah, I mean, Tilt is a classic example. They've been over 10 times on this ratio almost the entire time since 23, the beginning of 23. So they've been flashing red for a very long time. And, Gold Flora has been over 5 times for quite a while. And then beginning in November, they hit the 10 times ratio, and they're up at, they were up at, before the default, they were up in the 30s, 30 times ratio. Forefront, same thing.
Judging by some of the stuff that you've outlined right now, and you factor in Gold Flora's Chapter 11 bankruptcy they filed late last week, what do you think are some lessons we've learned? Sorry?
Receivership.
Sorry.
They can't utilize bankruptcy.
Okay, so receivership. So long story short, what are lessons learned here? And is this a one-off, or do you think this is a sign of things to come? Because I'm listening to you right now, like there are some warning signs out there. So what should we prepare for?
Well, I think, yeah, you haven't seen the last of the credit problems. We all know that there are certainly issues coming up in 26 with refinancings.
Yeah.
Of the 31 companies that I cover in my credit scoring system every week, 10 of them are over the 10 times ratio. So 10 of them have this kind of like flashing red light, like better look at those more closely. And
Frank,
Forefront is one of those. Air is another one. So
within that scoring, are you including real estate assets in the bucket of assets for the businesses, or is that omitted if they own real estate?
Well, so as an example, I think maybe you're referring to Verrell. Verrell basically is somebody who's avoided sale leasebacks, and they still have unencumbered real estate assets on some of their CPG facilities.
Yeah, Tariffs as well.
Yeah, Tariffs as well. And so directly, am I accounting for it? No. But in terms of various other indicators, like I have 4 different indicators of leverage. My system relates to liquidity, leverage, profitability, and size.
Okay.
Bigger is better, like in most things. And so I have 11 different ratios that go into resolving those 4 different factors. And asset, actual real estate assets is not one of them. No.
Why is that? Why is that, Frank? Frank, why is that?
Well, what would you suggest? I mean, if you think about it, how does that play? Are those assets encumbered? Well, then it factors into leverage. If they aren't encumbered, then the leverage is going to be lower. So I think the leverage numbers largely tell that story. And so I think I pick up most of that difference there. Now, the issue is when you look at a bunch of companies, and I've got 300 companies in my database, how do you resolve like that situation of like how much of this real estate that they own and is on their books is encumbered? You got to go through a lot of financial statement notes to kind of figure out what pieces are unencumbered, and that's the piece that I think I would love to add to my model is that, because that is financial flexibility, right? That they can loan against those, just like Verrell just did with this $12 million loan they just put on the books. They have other assets like that, and to go through and figure out how much other assets like that there are is a very time-consuming thing that you can't do like every week that I do this model. So it's a data problem. So the other thing, the bottom line is, I think all of these defaults that we saw in the last week were easily forecastable. I mean, they were sitting in front of us all to see, like, here's a company that's going to default. In cannabis, which I sometimes refer to as the land of the zombies, you see companies that are like this, like I just said. Tilt has been flashing red lights since 23. They didn't default. There was no trigger. And so, you go back in time and look at like MedMen. MedMen was like a dead man walking for years. But Gotham Green continued to fund a little bit of liquidity, kept eating up more of the equity through more warrants and more warrants. And that was a reasonable strategy because there was hope. Okay, the biggest asset not on the balance sheet. Hope is something going to change in Washington that will produce a big uptick here. Like
are there any Are there any names on your radar that you would? Are there any names on your radar that you expect defaults from next?
Well, once again, I think if you look at those ones that are over 10 times on that ratio, I would say Air is right up there. Air just hired a new restructuring officer as their CEO, and so obviously there's going to be some type of restructuring coming there, and it has to happen because they're refinancing. That's probably the single biggest one. I mean, Eanthus looks pretty high on that ratio as well. So are they going to default? I can't tell you because it takes a trigger to do that, and I don't see the trigger right now. Vibe Growth is another one that's very high on that ratio. It's a small company. Obviously the people like Schwaz are off the charts on that ratio, but they're correct. You can't even measure that ratio for them because their stock has basically gone to zero. But I mean, clearly something's got to happen globally there.
Well, we had Zach George, CEO of SNDL, on 7 days ago, and he was indicating that this is the beginning of the reckoning. And when you look at some of these alarm signals that have been going off for quite some time, again, I'll ask this question: is this a sign of things to come?
Yeah, I think we've been in this extend and pretend mode for quite a few years. And it was based on something, and it still is. There is still a reason for extend and pretend, and that is, do you think something is going to happen in Washington?
Yeah.
Now, lately, that hope seems to be dimmed, and to the extent people lose that hope, then the reason to extend and pretend goes away. What you see is what you got. And if that's the case, then you might as well, get down to the tough work of restructuring now and not, keep kicking the can down the road. So it all depends on that.
Yeah. Well, one thing I am seeing is that the Canadian market is starting to rebound, and Anthony and I were in Washington last week, and the European market is actually growing substantially, and it's medical first, and they've got a clear, definitive messaging. They're getting the backing of countries, and I feel like in a lot of ways that when it comes to research, now is the time to act for America to get something to pass. Otherwise, they're going to be left behind. Those were some of the strong words from a lot of the European investors, and how probably institutions, if they start to see growth in Europe, will look for those European footprints more and more and more. What are you hearing? What are you seeing? Do you relate to that in some ways? Do you follow the international market? What interests you about it outside of the U.S.?
Sure. I mean, we follow capital raises and M&A on a weekly basis, around the world, everywhere. And my observation is that a lot of the heavy lifting in terms of capital formation is still to come. You look at Germany, a growing medical market, but how much of it is import? A lot of it, right? They're not really building, indoor, 100,000 square foot cultivation facilities, which use up a lot of capital. So we haven't seen the capital formation wave that you would expect that would, when you take a market as big as Europe in general and say, how much capital will it take to drive that if it's going to be an internally, built market,
right?
A tremendous amount, and we haven't seen it yet. So it's still something that is to come. And I haven't seen it yet, even so far this year. So this is still a story that's developing. And as we know, like if you go back in the US and say, how long did it take from, when we had the inklings of a medical market to when we actually got into a full-blown legalization? I think, these things take longer
I hear you.
than anybody expects.
Let me ask you, like, if we did get some sort of reform, I'm just going to throw something out there. Let's say at some point this year, let's say 3 months, 4 months, 6 months. How does this, we understand how this industry would change. We have asked you this before, that a lot of companies aren't paying tax, but let's face it, the sentiment will change to be a more positive light. But do you think if there is at some point an announcement at some point this year that this whole reckoning that we talk about will be minimalized in a lot of ways?
Yeah, I mean, there are still going to be losers out there, and we can kind of identify who some of them are, who are just not operating well.
Yeah.
Like if you're operating at 15% EBITDA margins, the tax issue is a non-event for you, because you probably have such low gross margins that it's not going to save you, in other words.
Yeah.
But on the whole, yes. I mean, I think going back to the idea of this whole extend and pretend, with some hope on the horizon, would people be more inclined to say, let's push out this problem another couple of years and see how it develops? I mean, for instance, cannabis. I mean, I think the cannabis rescheduling really speaks to this. If you get the hammer of maturities off of you, and you can actually start to restructure your business operations, and continue to sell off bad, non-performing assets, and having time is a huge value for these stocks, because if you think about these stocks, these companies that are underwater by my indicator, by default indicator, what is it saying? It means those stocks are out of the money options.
Mm-hmm.
Technically, they're trading as an out of the money option. And what makes things valuable for an out of the money option? Two things: time to maturity. So you push out those maturities, it adds value to the stock. And the other thing is volatility. Volatility is huge. They're trading mostly on volatility. So news of potential rescheduling, potential SAFER Act, this is all the kind of stuff that is going to push those bottom end stocks up multiples. It could go up 2 or 3 times pretty easily, because they're out of the money options.
Which bodes well for a company like Ascend, correct? Whose maturities aren't until 2029, as it currently sits.
Exactly. And even like Verrell, they have big maturities in 26, but it's all this one facility with Chicago Atlantic.
Yeah. And
that helps, when you have a single facility versus like multiple bondholders out there, your ability to roll that is much easier. Mm-hmm. And so even though they haven't already done it, I don't really have much doubt that they're going to be able to do it. Yeah. So, but you're right. Ascend has got a long runway because they got they hit the restructuring track fast. So,
time and volatility are some key takeaways here today. Yeah. But listen, I'd love to talk more. We got another guest coming up, but I wanted to have you on just to talk about some of these recent defaults and the receivership, with obviously announced last week with Gold Floor, and what this could potentially mean. Are these one-offs, or is this a growing trend? But I think based on some of the stuff that you'd mentioned when it comes to liabilities and current market cap from our chart earlier this week, it's a good tool, I think, or screening tool for people to watch closely to kind of assess their own risk on what the current landscape is. But let's continue these conversations. Enjoy the rest of your afternoon, and I'll check back in with you in a couple of weeks, okay?
Okay, great.
All right. Thanks, Frank. Appreciate it.
Get Margaret up here so we can start having a positive conversation.
I know, right? With that, it's I wanted to switch the conversation out of America.
It's funny, guys. I was thinking the same thing. I wrote some notes. Is the market has not discovered the opportunity in Europe, and there's no infrastructure, and that's the Canadian case. That's what Frank basically said, and that's what we're seeing. I mean, it's rock and roll in Canada, and it's hard to watch our compatriots struggle.
What a mess. What an absolute mess. All three of us were in Washington last week, but what was the big messaging that we got away? They're either going to own this or get left behind. And the amount of support that was in that room from the European market was phenomenal, especially that event that we went to. But you'd think it was the cannabis space in North America 7-8 years ago with so much, opportunity, optimism, and bright future ahead. And it was just nice to be around versus being at some of these conferences when it's the same old faces talk about the same old things. Didn't you think?
It was what we've been feeling for about 4 months in Canada. And look, we were down for 2.5, 3 years.
Yeah.
And then, we had oversupply, we had momentum, lack of momentum, all kind of like the wine lake in Europe. Everything's cleared out of excess supply in Canada. Now it's go, go, go. And I found last week in Washington, firstly, what an incredible city. I had not been.
No.
Wow.
Isn't it awesome? Well, you did go to Georgetown. That's a pretty amazing area. That's one of the coolest places you can go to in the country. But wasn't that great?
Yeah, and being in the Capitol building, talking about medical and legal cannabis, goes to show how far we've come. And I think 10 years ago, I don't think anybody would have thought there'd be a cannabis conference there. The U.S., it's a matter of time. I'm not going to make my opinions on when that's going to be, but look, the rest of the world has turned on, and we are going. So what Frank said about infrastructure not being there, that's true. So in Europe, there's not infrastructure. In Australia, they're building quite quickly. There are countries turning on. There were a number of countries there last week talking about wanting to export, but you've got to meet all the medical standards. What we're going to see and what our thesis is things are going to move to a globalized distillate and a globalized medical product, kind of like in agriculture, where you're going to end up with different grades of distillate, different grades of very low grade flour. And then that's going to be one market, and that's going to be probably from medical crushed into medicines, etc. And then we're going to have the real consumer, who's the adult use consumer, and they're going to love what we do, because that's where, if you're focused on premium products, genetics, the experience of the consumer, and elevating that consumer experience, that is, the future Heineken's, the future.
Yeah, I agree.
Like Neatus is a great example. And Tanqueray, whatever, take premium alcohol Scotch example.
Yeah.
That's where this is going.
Yeah, I agree. And you can't argue, especially when I look at some of your recent numbers. Congrats. Job well done. Let's get into some of those numbers. You reported a 21% year-over-year revenue increase, $4 million adjusted EBITDA, and positive free cash flow. Let's face it, in a challenging market. And all this was well done while absorbing your ERP implementation costs and ramping up your vape product line. So job well done. In a nutshell, how would you best describe the year that was had? It's nice to see.
Yeah, no, it's great. And we spent the last couple of years where nobody was paying attention, just building the business.
Yeah.
We're business operators first, and we're consumer centric. And if you build a real business, it will come. So we've been focused on that. Now we're here to tell our story a little bit more, because we see what's next in terms of the opportunity. We want to run more at it. But we have the brand strength to launch new products off of. And the way I describe it is, when you used to walk into a cannabis store, and the original experience for the first 5 years in Canada was you couldn't see the product inside, you open it up, and a lot of the time you were very disappointed. So consumers went back to the legacy market. We have built a brand trust with our product.
Yeah.
And so consumers expect a quality product when they open it up. What that means when we launch a new product is that they're willing to try it. They try it, they like it, then they rebuy it. That's the moment of truth. Do they rebuy your product? And then guess what happens if it's really good? They recommend it. And so we're seeing that. I was in a store in Vancouver yesterday, end up talking to some of the bud tenders. I tend to turn the car over every time I see a store, and I'll be just 2 minutes, run in, see what they have to say about our products. And it happens a lot. And, the bud tenders in the store all said they exclusively smoke our product. Now, that is not true across every bud tender and across the country, but really proud to see that, and really proud because quality matters, and it goes through to your brand promise. So, we are focused on those brands. Look, we had a tough first half of the year last year. We were still seeing price compression in the Canadian market.
Yeah.
We weren't happy with our numbers. In that time, did the work on looking at our sales mix, looking at the profitability. I would love to see where these numbers would have been if we'd had the run rate and the momentum that we had from the second half of the year forward. And I think that tells you a lot about where Rubicon's going. In addition to that, I'm going to steal what the next question probably is from you, which is, how do we get bigger? And we're buying a new facility. So
Yeah.
we've got an acquisition announced, should be closing sometime in the second quarter. And from there, we're going to increase our capacity by about 40%. So we'll see that next year. We'll see the cost of it this year. You're investing ahead, you're going to have some hits, but look, we're on a roll and we're excited.
In terms of the strategy, and I know that we obviously kicked off talking about the European Union, how a lot of the Canadian LPs are exporting to the EU right now. That's a trend, as they're, I guess, getting better pricing for their flower. Is your strategy for 2025 to go to further your dominance in Canada and go deeper into the Canadian premium market versus exporting the premium products to those European countries?
Absolutely. Well, absolutely. And what we're seeing is so many small craft LPs with small amounts of production. They can get it. They can more profitably sell it into Europe. But we believe that the brand promise in Canada is being delivered right now, because those are coming off of shelf. The provinces are narrowing the SKU count that they've got, so they control the list that the retailers can buy off of. This is the time to invest in our Canadian customers, to show them that we're there, and what it actually is potentially giving us for us internationally is more price arbitrage because of the brand promise we deliver and the knowledge of quality that we sell. So, i.e., short form, we can sell our weed for more money than others. This year internationally, we call it test and learn. We don't have a lot of lots. We're sold out. We've got about an incremental 2,000 kilos of biomass we're expecting this year. We're onboarding Hope as quickly as we can, but we will go as slow as we must and as fast as we can to get it right. That's the mantra. But internationally in 26, we're going to have some product going there. We're going to be at ICBC later this month. Very excited about that. And I don't know if the American audience understands the sheer inbound demand that is coming.
They don't. They don't.
So in turn, you just brought up something that I don't think we've talked about. So we talk about the supply imbalance in Canada via the trend of exporting to the EU. Has that forced the provinces to rationalize SKUs and kind of hone in on what they're selling? And can you imply there that loyalty is not going to be forgotten as it relates to the future of brands getting into those channels and 100%. The distributors carrying your product?
Well, we believe that. Look, these are customer relationships, and if you go to deal with Costco or Walmart and you come off shelf and then come back to them and say, no, now I've decided I want you to be my customer again, people don't like that very much. They are building their businesses and want consistency and that you to show up. So they are measuring on time, in full scores, rate of sale of your product. Customer scoring matters. And so we're committed to our Canadian customers. We would love to have some more volume to export for the profitability impact, and that's obviously being looked at. But we're very committed to the Canadian market. I think put a different lens on it of the unpredictability you were talking about in the last chat. This is a market where we have regulators that we know that are not going to slap changes on us, that are not going to slap tariffs. This is a known existing market, and when you're transporting things across markets, we've seen it in and out with Israel already in the last number of years. Tariffs get slapped on, exports can be held. There's a lot of complexity, and I don't think there'd be a better way of showing it than what's happening in the world today. So we are very committed to our Canadian customers. And look, I'm a proud Canadian. We grow great weed. We want people to enjoy it. We love that British Columbians love what we do. But the international market's huge.
Yeah.
Very. When you look at your Hope facility acquisition, you want to expand your production, as you said, by 40%, something you indicated to us last time you were on. So when we factor all this in, maybe break us down how much untapped market share there is when it comes to the premium space, both domestically and internationally. What are we looking at here?
I think it's actually even hard to quantify right now. We certainly have demand that we didn't fill last year in Canada, and we have numbers, but I won't say them because it's competitive information to a certain extent. That being said, we are getting asks for, could we deliver, from 5 or 10 different sources, could we deliver the same strain, 200 kilos every month? And the medical markets internationally want consistency because it's medical and it's patient care. So they're really looking for, can we have, and there's a few of our strains that are very in demand, our Blue Dream, very famous in Canada. We're very proud of it. It is a strain that we get asked for. It's not a strain that sits at 30+% THC. It's closer to 2022. For a medical patient, that's fantastic. It's got great effects, but also people want to get that medical patient and a doctor when this is prescribing a medicine. And I think you guys probably both heard that last week about this is about patient care. And so quality, consistency, and knowing what you're getting is really important. And that's where the medical cannabis started. Yes, we're going to end up at some stage, in my view, having a wonderful, robust adult use market around the world. But for the next foreseeable future, could be, say, 5 years, it's going to be medical.
You had mentioned that vapes were driving growth the second half of the year in terms of the numbers. What do you see as driving primarily being the growth drivers for 2025? Do you think it's an uptrend in flower, more focus on that vape form factor, or are there also incremental products that you plan to bring to market?
We always have incremental products coming to market, and we do like to keep our powder a little bit dry with our competitors, but I can tell you that in British Columbia this week, we are testing and learning a new edible. We've just managed to make it to under one of our other brands. So we just managed to make the #5 edible producer in the country in the fourth quarter last year. I mean, that's amazing. What we've done with the edibles market in Canada is prove that there is a home for live rosin edibles in the legal market. And that's extremely exciting. We are taking now a resin product and putting it into our brand called Homestead. We're testing it in BC. I tried the product this week. It's just got hit shelves. It's not my full spectrum rosin experience, but boy, is it a pretty nice experience, and it's a differentiator from distillate. So we're going to see some growth there. We're going to see a full year of vape. Last year, by the end of the year, we only had 5 vape in market, and it was started with 2 sort of mid-year, and we ramped up. We have 7 in market now, so we're going to have a full year of vape in market. Plus, we've got some incremental biomass that we've done. We've got with our contract manufacturers, and we're seeing with our wildflower product, which is a topical product, we're seeing a lot more competition in that into that category, but we're still seeing our position hold. And it's not about having more SKUs; it's having about a really strong efficacy, a consistent product.
Right.
People consume, they like. I find it amazing. I think the wellness customer is not yet completely comfortable going into a cannabis store, which is a bit disappointing because we think this product in a Whole Foods would do incredibly well. But it's such a great product. It's an alternative to Voltaren and some of the pharma products. And we just see a steady growth with that brand, and because of the trust in it.
What was the decision made? Like when you look at the OCS, we're in a now and a day and a time with limitations of certain SKUs now where it's like, if your product doesn't sell, guess what? It's off the shelves and it's gone. That's the biggest change that we've seen from yesterday versus today. When was that decision made? And what's the biggest notable change that, how quickly, I guess, that happens and how that all works and how things have changed?
Yeah. A couple things people don't realize is, depending on the province, there's limited product calls every year. So Ontario has 4. So they will say, this is what we're looking for in that product call. They also have metrics where they will delist your product. If they're holding inventory of that product and they delist it, they will send it back to you and you will get a credit, or you will have to pay the cash for that amount. So you don't want your product sitting there. You don't want to sell it and have it sit there. This is an aging agricultural product. You want to turn that product, right? This is about rate of sale. If we have a product on shelf that's not turning, we want to pull it back, find a way to sell it, and get another thing into that slot that's going to move more quickly. So classic CPG.
But the way the market is structured, you can't augment the price at retail to have the product sell through. So you're kind of at the mercy of the other parts of the supply chain if that product does not sell.
This is about relationship. And us pulling back product if it's not working, or managing that appropriately. This is where you've got to have great products. But you asked me, Shad, when did this start? 2 years ago. Was it 2? I think,
I know you indicated this in our last interview.
Yeah.
Calls that are like, has that picked up in the last year or so? No.
Well, the SKU rationalization certainly has. So, for example, there was just a call in Quebec where I think, and I could be incorrect, they either netted neutral with the adds and subtracts, or they netted down, and I can't remember the statistics on it. But look, the provinces don't want to just sit in warehouses full of product that doesn't sell.
Like exactly.
It's a lot of time and cost, makes it more expensive for all of us. So this is not about growing, if you're running a small operation or even a large operation, it's not about growing what you like to grow and you like to consume personally. This is about, what does your consumer like? Is it in the right format? Do they trust it? And are you supporting the brand out there? Do you have a sales and marketing team that is out in the hunt? Are you in the community? Are you on the ground? Are you talking to bud tenders? Because I think that's also where this industry is dividing. A lot of people are, if you've only got 1 or 2 SKUs, you can't support all the stores across Canada.
Of course.
So you really got to make sure you've got a good ground game. And I'm really proud of our sales team. We actually call them education consultants, because this is about educating people on the benefits of premium, the benefits of different genetics, and all various things like that.
Well, what's nice is that you're starting to see just the maturity of an industry, and in so many different levels. And when you're in a country that's federally legalized, I get the early days, it was all built on promise, and there was like some dark times, but I feel like in some ways that's what the US is going to have to go through, if and when that ever does happen. But in some ways, it's almost like looking into the future, because as you start to build more and more infrastructure, there are opportunities internationally for a country that has federally legalized it. And I think as you start to see and mature more and more, I'm starting to learn more about the EU market and what the domestic opportunity in Canada presents too. It's amazing how you're starting to see just the advancement of an industry on so many different levels that has a country that's legalized it federally.
Yeah, look, the Canadian experience, we've gone through a national competition and a hugely competitive market.
Yeah.
And I think
great.
that is very different than what the advantage was of various MSOs and individual state operators when they were, shooting fish in a barrel more.
Yeah.
Things change very quickly. We've experienced and lived it, from people thinking there's only going to be 100 licensed producers in the country to, if you want a license and you pass the requirements, you're probably going to get one, and let's have open competition, which, we're here to compete and we're here to win. Full stop.
One last thing I'll bring up, a key advantage you mentioned, your earnings report was refinancing your debt at 6.75%. Job well done as you ramp up your expansion with the Hope facility. So how are you thinking about deploying, I guess, your capital in 2025, especially as you absorb, I guess, some of the near-term costs of this acquisition?
Well, exactly. Look, we've got fantastic debt. We've got incredible partners on that. And we're very focused on using it wisely. I think now is a moment to run in the Canadian industry in terms of towards opportunity. So we will be deploying some of our capital. Look, there's the Hope acquisition, and we'll put about $2 million into the facility itself. We just got a note back from a builder who said it would cost $12 million to build the thing today, plus all the fixtures and fittings you guys are putting in for Cannabis.
Yeah.
Or you have already in there for Cannabis, and you're buying it for $4.5 million. Wow. And we're going to put a little in there. We'll make sure the irrigation, things that are absolutely critical for growing, we need those to be working.
Yep.
There's going to be some operating costs that we're going to incur this year. And look, I believe we've got to grow our team, because I can see the future. We've battened down the hatches the last couple of years. This year, there are opportunities that we're going to run at them, including some efficiencies. We've got some work to do, in my view, on our margins, and we've been focused on getting the best quality product out to market to make sure it hits with consumer. Now I think we've got to shave the dollar a little bit underneath it and make sure our processes deliver a strong gross margin that is reflective of the premium position we hold.
It's great. Well, one thing I will agree with Frank in the previous interview was that execution is key, which is extremely important, but easier said than done to find a leader that understands operations, understands how to read a balance sheet, but also understands the plant. And I know a lot of people try to sell that, but those are 3 attributes that you have, which is why you're doing what you're doing. So keep up the good work, because I think there's a lot of people cheering and rooting for you, but it's a good story within the industry. So appreciate you checking in and providing us the latest update.
Yeah, no, we're proud we're here. Please reach out to us, ir@rubiconorganics.com, but also, I always try to give a plug for a product. And if you're in Canada, we've just launched a flower that's called Pink Drip, and it's off the hook. So
I like that name, Pink Drip.
Yeah, and it smells beautiful.
I believe you.
Yeah,
I'll be trying it next time I'm up in Canada. Hopefully we're in BC soon.
Yes. We'll arrange some of that stuff, but in the next few months, we are looking forward to come out and seeing this facility, which will be exciting. But in the meantime, congrats to you and your team, and let's keep in touch. Okay.
Thanks, guys.
All right. Thanks, Margaret. Oh, that was nice. Somebody ever ask you, okay, I got news for you. You want the good news or bad news first? Give me the bad news followed by the good news, right?
Well, I mean, for everybody that lived through the Canadian cannabis craze from inception.
Oh yeah.
It's nice to see companies actually succeeding up north now, making money, expanding, generating profits.
I know.
But it took a long ass time to get here. A lot of value destruction, a lot of receiverships.
I agree. And the way the expectation
they got here.
And it's why investors to this day, you know, I think a lot of people that will actually watch this, they're waiting for that next boom, so to speak, because that's what happened in the Canadian market. But I will say, like, they had their hands tied. There's only so many things that the Canadian companies could do because that had to develop and grow more in the European market. But these Canadian companies just aren't focused on the Canadian market. It's internationally as well. And a lot of
absolutely
and what I can say and share, and Anthony, I'm sure you agree, is just the advancements and the support that individual countries are providing over there. It's a breath of fresh air to see. And the US is
there's been a lot of growing pains. It's funny because Canopy Growth relaunched Metrum the Spectrum brand this week, which they acquired via acquisition when they acquired Metrum. I think it was back in 2016.
Yeah,
was when Canopy acquired Metrum. They acquired Metrum for $430 million. Their market cap today is $140 million. It just goes to show you where we've came. I mean, when you look at Aurora,
it's all easy in hindsight. It's all easy in hindsight, though.
Yeah, but I mean, we talk about Aurora being a global leader right now in cannabis. They've got a market cap of $220 million. They acquired Canamed and MedRelief for a combined, I think, $4+ billion back in 2017, 2018. It just goes to show you like the wonkiness that it took to get us here. It's been a learning experience.
The biggest eye opener, I don't care, is Nuvera, the company that went public in 2 weeks.
Well, later. I mean, yeah, that was a multi license that was sold for $660 million to a bunch of guys that were double-sided the deal.
Vic Neufeld. Yeah, I just said a name, but yeah, there was some crazy stuff going on there. Anyway, we finished things on a great note. Now it's time to go even a greater note. He has been on a hiatus for quite a long time, but he's back. Fresh off an audition, the new revamped Miami Vice show. Let's bring in Guap for Mic Drop with Guap. How are you, buddy?
Yes. Greetings, Earthlings. Glad to be back.
Good to see you.
Yes.
Damn, Honey Crockett is here.
Yeah.
How you doing, brother?
So, yeah. I mean, isn't it funny that the answers to winning this game don't exist in a spreadsheet? It's nice to see Rubicon talking about genetics and quality and new products. It's very refreshing.
Well, to my point, I feel like, let's face it, there's a lot of executives within this industry that have a background on Wall Street, but do they understand cannabis?
Right.
And then suddenly you hear, you know what, we got to get our hands on this and do it ourselves because we can't trust other people to do it. And it's just a growing pain. If you can find somebody like Brodie Cobb, another great example, understands the capital markets, understands operations, and most importantly, understands the plant. I know it's a private company, but my God, what he's doing in Florida is phenomenal. But it's few and far between that you can find executives within this industry that hit all three of those pillars. She happens to be one of them, and you can understand why the story that she's building out, right?
Yeah, I'm not a big spreadsheet guy, but the math that did math for me was we had Jamie Pearson on a few weeks back, J with the handle, which I love, JBoogie5000 on Twitter, no relation. And she broke it down. She said, look, there's 85 million people in Germany, 10% self-report using cannabis. And self-report, that's obviously conservative, right? There's probably 12, 15, 20, who knows? So that's 8.5 million people. You've got approximately 700 to 900,000 registered medical patients in Germany right now, according to estimates. So essentially, like, where are the other 7.5 million people buying, right? Is the illicit market. And when you've set up a system that, suddenly doctors can prescribe a lot easier, you've got better products available in the menus at these pharmacies, and the price is competing or beating the illicit market, now you've got a recipe for success. And so you're seeing a lot of companies shipping a whole lot of pounds over to Germany. So that will continue to ramp.
One of the things that Frank brought up, and I want to get your reaction from both of these guys, like how important is it to build infrastructure over in Europe? If you look at countries like Germany that do have these import licenses.
They are building infrastructure in Germany. There were four or five incremental licenses that were handed out 6 months ago to Demican, Aurora, Tilray, and I forget who else, but they're literally doing that right now.
So it's not completely
Germany's been proactive in incrementally increasing the grow capacity granted, all it be limited producers that are actually on German soil, but they're building out that infrastructure now.
Yeah.
It's literally happening.
Yeah. Yeah, it's we got to get over there. We will be over there, and there's a lot that we're going to learn, especially going to Germany. But we'll be there in June, and then we're also thinking of in the works of potentially going. I know some of you reached out to me about what's an update on Mike DiGiulio from Village Farms. We saw him in Washington last week. The man is crazy busy, but early May is the latest we've got on when we're going to have him on next. So there's your update, everyone. And then Luke from Canopy was going to be coming up on the third week of April. So hope that gives you a better update too. But anyways, Guap, before I rudely interrupted your take, let's continue on with you.
Oh, no sweat. No, I wanted to tag on and just talk about the German opportunity for a little bit. Look, I didn't have any gray in my beard when I first started coming on this show. So I just want to first acknowledge the cannabis space.
Do you now?
Yeah, the cannabis space, the overall market. I mean, I have a family portfolio that's heavily exposed. I mean, we have preferred stocks and T-bills and dividend stocks. We made a big shift to that a few years back, but we have to acknowledge and the familiar feeling of that pit in our stomach as being a very real feeling when markets go down. But the S&P went from 600 to 6,000 in the last 15 years. So 10% haircut doesn't feel great, but let's we did go 10x trough to peak here. But yeah, every single time I've considered trimming or reallocating, my mom, I give her credit for being the sort of diamond hands Warren Buffett of the group, and she just told me to hold on. And I mean, does everyone remember 2018, 2016? No. But we had some pretty violent and this is looking like 2 monthly candles that look more like COVID. I'm not predicting, no one can predict V-shaped recoveries or tell you what price level things will turn around or it always goes up or anything like that. But we do have to keep in mind that the media plays on emotion, gets you to really get scared, panic, sell, and then big money makes money on the volatility. If everything was just flat, no one would make money. So it does kind of get violent sometimes. What's going on? Anthony, why does he only wear a polo shirt?
But responded by true Anthony way, because Anthony does what Anthony wants.
Yeah, the Dales Report account response. So yeah, anyway, I just wanted to examine a little bit.
I agree with you on that.
Completely. History of sin stocks in difficult economic times. So obviously Trump does his best to cause quite a bit of tension, which may lead to people seeking to disassociate a little bit. That's usually good for the tobacco, alcohol, and cannabis industry.
I'm going to stop you right there. because the Trump administration actually just put out their 6 drug policy priorities for 2025, and cannabis is not on them.
Oh,
So
right. So so what I'm saying is, when you go back to the periods of time I looked at, was the Great Depression, post World War II slump, 1970s stagflation periods. Essentially across the board, if you look at alcohol, tobacco, not as much data on cannabis historically during those times. When times are tough, people definitely start using substances a bit more for various reasons.
How's Philip Morris been performing recently?
Right. Yeah. So if you look at I have a chart that I've been tracking a lot of different things since Trump was elected.
What are you noticing?
On the 21st. Yeah. So Philip Morris is up nearly 25% since Trump was elected, while SPY is down 14%.
Philip Morris has been up 25% since Trump was inaugurated.
Yeah, they've crushed it.
Right.
Why?
Crushed.
Do they own Zen?
That's the kind of what we're talking about.
Yeah.
Did they see something coming? Obviously, I don't know. Maybe some people did.
It's all our hope that cannabis would get sort of eventually, once the capital markets are actually an efficient system with price discovery and everything, that we would be sort of lumped into that at some point. I'm not saying that's happening right now, because it certainly isn't.
Did you see that comment by Eric? Yeah, Eric, I think you're right. The further away from the end of the Biden administration we get, the more likely we'll see MJ reform. Trump doesn't want rescheduling associated with Biden. He wants the credit. There is some truth to that. He wants to control the narrative. I know, maybe that's thinking a little much, but one thing is for sure, especially when we heard last week, he wants to control the narrative in all this and is not going to hint at anything that pertains to rescheduling. It'll come out of left field. When that is, I don't know. Finish your thought.
Yeah, the unnamed White House source that is all-knowing. I just don't buy it. The government constantly feels like the right hand doesn't know what the left hand's doing. So for some unnamed White House source to somehow be all-knowing and know, and maybe they just can't comment on it because they're been told not to.
I agree. Yeah, it's 100% what it is. All right, my friend. Good seeing you. Everything else is good?
Yes.
All right.
Yeah. We're still putting out awesome clips and getting shares, and it's tough going. It was tough to get on the stream today, right, guys? But someone's got to cover all this, and I think we're doing a hell of a job, honestly.
Well, big takeaway here today is execution, and Margaret is doing a great job. But, as much as a lot of headache right now, there are some notable things about total liabilities and market cap. I think there were some things that I thought was good with you, Anthony, that you questioned, because there has been some executives that reached out to us from previous interviews we've had with Frank about the value of real estate and how he doesn't incorporate that in. And that's a big question mark. Big question mark.
If you're talking about assets of a business, real estate it's an asset. Granted, even if they have a mortgage on it, they own the asset
for sure
to a certain extent, especially if it's a sale leaseback, there's no ownership present there. And that's obviously a liability versus an asset. But
Jim Cacciopo,
someone like Tariffs, someone like Varrell that own
Jushi,
and Jushi that own the meat of their real estate portfolio. Those are assets that can be leveraged to reduce that metric. So I would put in the real estate holdings within that if you're trying to get a true barometer of what's going on.
Where'd Jim go to Cacciopo? Harvard?
I have no idea.
Yeah, I think he went to Harvard Business School.
One of the two.
And when he was kind of explaining that's when, trying to contest it, you just sit back and kind of learn. But he had some very valid points. But that wraps up today's show. Back here next week. Busy week coming up next week. Bina Goldenberg, another great Canadian story building from Organigram, is going to be coming on, talk about their latest acquisition from this week, as well as their rebranding. And then next Wednesday, Doug Drysdale from Cybin is actually going to be coming on. In addition to that, good and interesting and popular guest that we've had on from time to time is Chief Strategy Officer from Jushi, Trent Woloveck, is going to be joining us once again. He's great.
Ricky Williams should be coming on to talk about Texas hemp. Also, on that note, with Organigram, Obviously, the main reason the bean is coming on is because they just entered the hemp beverage market. Adam Terry actually posted a pretty damn interesting graph that the cannabis beverage opportunity globally is expected to hit $28.6 billion in 2033 at an aggressive growth rate. It currently sits at 1.7 billion today. So that implies large players coming into the space as well as explosive growth in demand as it relates to those products moving forward.
There you go. Arns, we're going to sign things up. Before we do, kick that mic drop music back up. We need it on a Friday.
Yeah.
Arns, you there? Arns, you didn't fall asleep, did you? Arns? That was good the other day.
That was
all right,
great.
Jen. Well, listen, appreciate you guys as usual. You want to get a full recap and analysis of our view of Rubicon's latest earnings, make sure to scan that QR code and subscribe to our Baked In newsletter. If you haven't done so already, it's delivered to your inbox weekdays, Monday through Friday at 8 a.m. Eastern time, giving you all the latest information on the business and reform side of the cannabis space. I'm going to have a full recap of the biggest developments of the week in cannabis coming out Sunday night. I'll have some more reform content coming out tomorrow, so stay open-minded, stay connected, and I'll see you next time on our latest Straight to Black podcast. Anthony, go up, enjoy your day.
Cannabis is recession-proof. Book it.
Hey, everybody. Stay connected here. The latest Straight to Black podcast. Another great episode under the belt. What'd y'all think? Do you like what we had to say? Please leave any comments below. And as usual, make sure to subscribe to our Baked In newsletter. Check us out on Apple and Spotify. And if you haven't done so already, make sure to smash that like button, leave some comments, as I said before, and subscribe to our channel because we wouldn't be here without you. Thanks again, everybody, for watching.